Today we're going to go over hard money, how to get the best rates. Investing is a leverage game. You need other people's money to make money. You just don't have to overpay for that money. And we want to make sure you understand how to get the best rates in this current environment with hard money. Now, sometimes hard money is asset-based lending, private lending. That's what we're focusing on today. How to get the best rates. When we talk about hard money, what am I talking about? This is really asset-based lending. Some people call it, like I said, private lending. Some people call it asset lending. But what it's really focused on mainly is the property. Things have changed dramatically over the last 3 or 4 years as hedge funds, Wall Street have gotten into this space too. They do look at credit and they do look at some experience, but really the focus still is the property and the project. What are you doing? Is it a scrape? Is it a new build? Is it a flip? Is it a burr? There's a lender for your property that has the best rates. Lending is very similar to investing. Each lender has their own likes and wants. Just like investing, maybe you don't want to be in the rural areas, maybe you don't want to be in the high end or the low end. Lenders are the same way. So number one, you have to understand that not all lenders want your project or want to give you the best rate on your project because it does not fit in their box. They all have something they like, just like you as an investor have things that you like. So now that we understand if you're looking for the best rate, you have to find the lender that actually likes your project, likes what you're doing, maybe your experience, where the project is, the size of it. So now let's look at the 3 lenders that make up the hard lending, private lending world. So there's 3 basic lenders in hard money. The local lender, those are the lenders who are lending in your state or maybe just your city only. Then there's the national lenders. These are the funds that have come in the last 5 or 6 years, backed by Wall Street, hedge funds, and they're lending throughout the US. And then last, the lenders that you have to look at is what we call real OPM. And this is really just that family member, neighbor, whoever has money in their IRA or in their investment account, and they just want to put their money to work, get a better return, and then also give you probably a better deal. Typically, if you're looking for the best rate in hard money, what you're going to find, depending again on your project, some people will do land loans, some people won't. Some people will do scrapes, some people won't, some people will do new builds. So whatever you're doing, you have to find the lender that matches you, because the better the match, the better the rate you're going to get. But overall, typically, if you're looking for the best rate, it starts at number 3. So if you find a family member, friend, neighbor, or just an investor who's looking to put their money to work and get better rates, that's where you're going to find where you have a lot less costs. Because when we're talking about rate, we're not talking just about the interest rate. We're also talking about the points, the fees, the appraisal costs, all of those things when you're looking at your total cost that's going into a project. Remember, our goal is to put you in the best position for you to make the most money. And sometimes that means using different lenders for different projects. Typically what you're going to find is with the real OPM, you may be somewhere like 3 to 4 points less in interest rates, especially when you find someone. Even in this market, someone getting 6 or 7% is a lot better than what they're getting at the banks. Now your national and your local lenders, they're going to be very similar in pricing. It just depends again what they're looking for as far as in their portfolio. Typically these people in 2022, 23, they're going to be somewhere in the middle 9s to up to 12% already as far as interest rates. Your local lenders typically are not going to have all the other fees, the underwriting fees, the appraisal fees, the credit. We have a great tool. It's called the Loan Optimizer. You can download it from our site, Hard Money Mike. And right there you can put in 3 different lenders for different projects and see which one for that project is best. When you're looking for the best rates, you really have to shop around per project to make sure you're getting the best deal you can. So hard money, lower rates, the number one thing you have to look at when you want the best rates, the best terms out there, is lower rates equals lower risk for the lender. The better you are at lowering the risk for your lender, the better the rate you're going to get. It's lowering the risk and making sure you find the right lender, because if you don't have the right lender who does not want to lend on your project, they're not going to lower the rates anyway. This goes hand in hand when we're making sure we have the right lender for our project, and we're going to lower the risk. So how do you lower the risk? We're going to go over 7 ways that you can lower the risk so your lender can give you a better rate and make your project more profitable. So number 1 is making sure you use straight talk with your lender. And that means whatever you say, you can back up. Because what lenders don't want is trying to figure out what's right, what's wrong, What do they say that's correct and what's not? Typically that means you just go to the end of the pile. Or they'll give you a loan, but they'll increase costs. When you're talking with a lender, give them everything you know. Make sure you straight talk them. Even if you had a BK or your credit's not there, let them know the good and the bad. Don't let them find out that maybe there was some things that were hidden, shoved under the cover. This is probably the number one way to make sure you don't get a good rate. The second thing is LTV. The lower the loan amount on a property, the less risk for the lender. The less risk for the lender, the more likely they're going to give you a better rate. Number 3 is experience. How much experience do you have flipping homes, building homes, developing land? The more experience that you have in showing success, the more lenders who are going to compete for your business and the better rate you're going to get. Number 4 is credit. Now we talked about this at the beginning of the video. Most national lenders now, the hedge funds, the Wall Street backed money, really look at credit as one of their items. And the better the credit, the better the rate. Most local and even the real OPM, that's not a big requirement. They'll look at your credit just to make sure you're not defaulting or have a foreclosure or bankruptcy or anything else like that. But they're not going to look at it. But in credit, for getting the best rates, the difference between a 640 and a 740 could be anywhere between 1.5 to 2 points on your project. That's a lot of interest that you're sucking into your project, taking it out of your pockets if you don't watch or monitor your credit. So these are the main items that the lenders look for, but they also look at property types and projects. We went back to this before. Each lender has something that they like. Maybe someone doesn't want to do a mixed use. Maybe someone is not into doing rural properties, maybe conversions, maybe pop tops. It does not fit in their box. If it does not fit in their box, doesn't mean they won't do the loan. It just means they're going to charge you a little bit more, which is going to make your project a little less profitable for you. Number 6 is loan size. Some lenders do not want to lend under 100,000. Some don't want to lend under 500,000 or even $1 million. So know what your lender likes and they don't like. Typically what you're going to find is hedge funds don't want to do small loans, maybe under $100,000, where maybe the real OPM, your neighbor, your friend, don't mind doing a $25,000 or $50,000 loan because that's what fits into their investment bucket. Just remember, loan size will take a few of the lenders out of competition for your deal. Number 7 is location. Some people don't want to go out of state. Some people don't want to go across states. Some people don't want to be in rural areas. Some people don't want to be in urban areas. So just depends on your lender, where they want to be and what fits in their box. The better you fit in their box, the better you show them that you're lowering risk with experience, with loan to value, with credit, with reserves, whatever it may be. That's where you're going to get the best rate. When it comes down to all of these things, what you really need to do is shop around. You need to shop around to get the best rate because, as we say, there's money in the money, and you're going to make money by paying less for your money. That's why we have this tool, the Loan Optimizer. You could download it on our site, hardmoneymike.com. It's free. Put 3 different lenders out there for each project to see which one is giving you the best deal. We want to make sure you're getting the best deal on hard money. Hard money used right is a great tool. Used wrong, it really will destroy your projects.